On December 8th, a single Cardano project will unlock 24 billion new tokens, and one wallet already controls 31% of them. Some are calling this Cardano's breakout moment, others see a dangerously centralized airdrop. Is this the catalyst Cardano desperately needs, or just a beautifully packaged hype cycle? All right, let's talk about Midnight. This is the name of Cardano's long-awaited, privacy-focused sidechain that's finally launching. And when I say long-awaited, I mean the Cardano community has been hearing whispers about Midnight for years. Now it's suddenly dropping 24 billion tokens on the world and going live in a massive event. It feels almost like some crypto mystery thriller, a secret project named Midnight, zero knowledge tech, and an airdrop spanning 8 blockchains. As a Cardano ADA holder myself, I've got to admit, I'm equal parts excited and cautious. So, what actually is Midnight? Let me break it down in plain English. Midnight is essentially a new blockchain that runs alongside Cardano, focused on one thing: privacy. Think of it as Cardano's answer to privacy coins like Monero or Zcash, but with a twist. Instead of just hiding everything in darkness, Midnight aims for what the team calls rational privacy. In their words, it's not about hiding, but about deciding what to reveal and to whom. That means you could make a transaction or run a smart contract on Midnight and keep sensitive details confidential while still being able to prove compliance if you need to. It's privacy and compliance in the same package, a bit like having an invisibility cloak that you can partially lift when the lawman asks, how do they achieve this? Midnight uses zero knowledge proofs, ZKPS, a cutting-edge cryptography technique. ZKPS let you prove something is true, like I have enough funds or I am eligible for this service, so without revealing the underlying data. This tech lets Midnight enable confidential transactions and even private smart contracts. Unlike typical privacy coins that just obscure wallet balances and transaction amounts, Midnight can allow entire decentralized apps to operate with encrypted inputs or outputs. Think about use cases like healthcare data, personal identity, private finance contracts, things you don't want splashed on a public ledger. Midnight could let these run on a blockchain without exposing all the details, and crucially, if required, you could selectively disclose information. That's huge for enterprises that need privacy but also need to obey regulations. No wonder even big firms like EY's blockchain lead have been saying privacy is the #1 thing enterprises need in crypto. Another big selling point: developers won't have to learn some esoteric new coding language to build on Midnight. They're allowing smart contracts to be written in TypeScript, a very common programming language, basically JavaScript with types. They call it TypeScript for privacy, designed to make developing on Midnight both familiar and powerful. If you know anything about Cardano, you know that historically it's been a bit challenging for devs. Cardano's main chain uses Haskell for smart contracts, which not many people know, but TypeScript, millions of developers use that. So Midnight is lowering the barrier big time. This could attract a lot more builders to the Cardano ecosystem because they can use a language they're comfortable with. Also, Midnight isn't some random community project. It's strongly backed by Cardano's founding team, Input Output Global, Charles Hoskinson's outfit. In fact, Charles himself has been hyping Midnight as one of the biggest upgrades of the year for Cardano. He even hinted that Midnight could act as a DeFi layer for other networks like XRP. Imagine that. A Cardano sidechain enabling private DeFi that even XRP users could tap into. We're talking cross-chain collaboration, not just Cardano in a silo. It's ambitious, to say the least. Now, let's talk about the token driving this whole thing, Night. That's the name of Midnight's native token, fitting name. Right, Night is to Midnight what ADA is to Cardano, but Midnight's tokenomics are a bit unique. They actually have a two-token model in a sense, Night and something called Dust. Here's how it works. Night is the main token you hold, stake, use for governance, etc. But you don't directly spend Night to pay transaction fees on Midnight. Instead, by holding Night, you generate Dust over time. Dust is a sort of resource token that is used to pay for transactions and smart contract execution. You can't trade Dust or stockpile it forever. It's a renewable resource that decays if not used. In other words, Night is like the goose, and Dust are the golden eggs it lays continuously, and the eggs expire if you don't eat them. Why go with this dual token design? The idea is to keep transaction costs stable and predictable, and to prevent speculators from driving up gas fees. Because Dust isn't tradable, you don't have people hoarding gas tokens and spiking the price. It also means if Night's market price goes crazy, it doesn't directly make using the network expensive, because the cost to transact is in Dust, which is generated at a fixed rate per night and not subject to wild swings of the market. It's a pretty novel approach. In essence, if you hold Night, it's like owning a little digital oil well that continuously pumps out the fuel. Dust, you need to run things on Midnight. And if you stop holding Night, your dust production stops and unused dust evaporates over time. This encourages people to participate long term rather than just speculating short term. Now, before Midnight's own network is live, the Night token initially exists on the Cardano blockchain itself as a Cardano native token. In fact, the Midnight team has already minted a total of 24 billion Night tokens on Cardano. 24 billion, that's the initial max supply. They did the minting in two large batches, one in mid-October and one in late November, according to Cardano blockchain records. So right now, those 24 billion tokens are sitting on Cardano addresses, waiting to be distributed and eventually transferred one-to-one into the Midnight sidechain once it launches. It's kind of weird to think about. The token lives on Cardano and will also live on Midnight. Essentially, at launch, you'll swap your Cardano-based Night tokens for the real Night on the Midnight chain. But they made distribution on Cardano first because Cardano was the easiest way to reach the existing community and do this airdrop. And oh boy, what an airdrop they've done. They call it the Glacier Drop. Instead of doing a typical sale or only rewarding Cardano diehards, Midnight went ultra broad. They basically said if you held even $100 of value on any of 8 different blockchains, you get some Night tokens. It's like Oprah went crypto. You held Bitcoin, you get Night. You held Ethereum, you get Night. ADA, you definitely get Night. Solana, XRP, Avalanche, Binance Chain, even Basic Attention Token, BAT, you all get Night. They took snapshots of wallet balances on June 11th, 2025 across all those chains. In total, about 37 million addresses qualified for this massive giveaway. It might be the largest multi-chain airdrop in crypto history in terms of reach. Here's how they divvied it up. Cardano wallets got the lion's share, 50% of the 24 billion tokens, so 12 billion Night for ADA holders. Bitcoin holders got 20%, 4.8 billion. The remaining 30%, about 7.2 billion Night, was split among Ethereum, Solana, BNB Chain, XRP Ledger, Avalanche and BAT holders. Roughly equal slices for each of those, which worked out to around 1.2 billion tokens per chain. For example, XRP holders were set to get approximately 1.4 billion total. Your individual share depended on how much you held in that snapshot, basically a pro rata allocation among all eligible wallets on that chain, weighted by your balance. The idea was to cast a wide net and bootstrap a huge, diverse community from day one. They didn't want just a few whales or only Cardano folks. They wanted everyone and their mother at least interested in Midnight. The Glacier Drop was designed in phases to keep it fair and avoid a gas war or Sybil attack chaos. In Phase 1, which started in July 2025, eligible users could go to Midnight's claim portal and claim their tokens for about 60 days. To claim, you had to prove you control the wallet that had the funds at snapshot, for example by signing a message, and provide a Cardano address to receive the tokens. They even use Cardano's Hydra scaling tech in the claim process to handle tons of transactions quickly, which is pretty cool. It's like they tested Cardano's layer 2 while doing the airdrop. If you didn't claim in that window, Phase 2 was the scavenger mine, a 30-day period where unclaimed tokens could be earned by solving computational puzzles, basically a proof-of-work mini-game to redistribute leftover tokens to people willing to put in some CPU time. And even after that, they have a Phase 3 called Lost and Found, giving any still eligible but late users one last chance over a 4-year period to claim a fraction of what they were allocated. Midnight really bent over backwards to be fair and inclusive with this distribution. No ICO, no big pre-mine for insiders, just give it out broadly and let the community grow it. It's a bold approach and quite refreshing, honestly. Now, the claim period, Phase 1 for the Glacier Drop, ended in early October 2025. The Midnight Foundation reported that by that point, over 100,000 addresses had claimed about 3.5 plus billion night in total. That's around 15% of the supply claimed by real users so far. The rest of the 24 billion is waiting, and that brings us to December 8th, 2025, the date that Midnight's mainnet goes live and the redemption event happens. Essentially, on December 8th, those who claimed will be able to receive their actual night on Midnight, one-to-one with the tokens they have on Cardano, and trading of night is expected to begin on exchanges that day. In other words, the token becomes real in the market's eyes on December 8th, and Midnight Network opens for business. Now here's something intriguing and a bit concerning. As of now, right before launch, all 24 billion Night tokens are sitting in just 26 wallets on Cardano. Yup, the distribution hasn't really hit regular users' wallets yet because of the way the claim and redemption is structured. According to on-chain data, the top wallet holds about 7.39 billion Night, roughly 31% of the entire supply. The second largest wallet holds around 4.5 billion Night, about 19% of the supply. So two addresses combined control half of all Night right now. If you extend that, it's reported that 12 wallets hold 99.99% of the supply, and the remaining 14 wallets have the other 0.01%. In other words, virtually every token is still in the hands of the Midnight team's distribution addresses, and maybe some early claim escrow addresses. On the surface, that sounds super centralized. Like, what happened to this broad fair distribution? The good news is this is likely intentional and temporary. Community sleuths and a Cardano stake pool operator who goes by Stake with Pride identified that the largest address, the one with 31%, is probably the Midnight Reserve for staking rewards and ecosystem needs. The second biggest, 19%, is likely the pool allocated for all the airdrop claimers, the Glacier Drop distribution, and the scavenger hunt rewards. In fact, the Midnight team has been periodically moving tokens from those big addresses to new addresses as they prepare to hand them out on launch. So it's not like one mysterious whale is hoarding these, it's the project's way of managing the token release. Still, it's a bit ironic. A project preaching decentralization starts with basically a 100% centralized token supply, albeit with plans to immediately disperse it. We'll have to watch how quickly those holdings decentralize after December 8th. If months down the line the foundation still controls a huge chunk, people might raise eyebrows. But if the majority gets into user hands through staking, rewards, etc., then it's mission accomplished. Now, the big question, will Midnight actually move the needle for Cardano's ecosystem, or is it just hype? Let's consider both sides because I'm honestly torn. Bullish case first. Midnight could be the catalyst that finally kicks Cardano development and usage into a higher gear. Why? For one, it could unlock use cases that were not possible on Cardano before. Privacy is a huge deal. It's the reason a lot of finance and identity projects haven't been able to use public blockchains. With Midnight offering selective privacy, suddenly things like private lending, enterprise supply chain, medical record dApps, etc., could choose Cardano's ecosystem. And remember, it's not isolated. Midnight is a sidechain partnered with Cardano, so value and users can flow between them. Night itself will be swappable with ADA at some level, or at least people who use Midnight might also need ADA for other things. This could drive new demand for ADA if, say, people want to stake ADA to get some exposure or need it for bridging, or simply because confidence in the Cardano ecosystem grows. Some in the community believe Midnight and the buzz around Night will attract things Cardano has been missing: more stable coins, Oracle services like Chainlink, and lots of new DeFi apps. It might even entice developers from outside. After all, they did an airdrop on Ethereum, Solana, etc. So maybe some devs on those chains go, what's this Midnight thing? Maybe I'll build something there. Another bullish point, narrative and attention. Right now, as we head into 2026, crypto in general might be starting to pick up again. Fingers crossed. Cardano has often been left out of hype cycles in DeFi and NFTs because it launched those features later than others. But a big exciting event like Midnight can put Cardano back in the conversation. If the broader market sees Cardano launches privacy sidechain with massive community distribution, that could renew interest in ADA and Cardano projects. There's even talk that this could be a short to mid-term breakout event for Cardano's price, or at least its visibility. I'm not saying ADA's going to moon overnight from this, but if Midnight succeeds, it definitely strengthens the fundamental case for Cardano as a platform. It's also worth noting that the cross-chain angle of the airdrop could pay dividends. They didn't just preach to the choir, Cardano holders, they went and gave tokens to Bitcoin folks, Ethereum folks, etc. That's a bit like inviting a bunch of neighbors to your party. If even a fraction of those 37 million eligible people get curious and engage with Midnight or Cardano because of this airdrop, that's a win. It broadens the community beyond the usual ADA crowd. Midnight's team explicitly is fostering interoperability. I read that they plan to have bridges connecting Midnight/Cardano to Ethereum, Solana, Avalanche, etc. not long after launch. So they aren't trying to build a closed garden, they're building an open network that links up with the rest of crypto. That's increasingly important. Charles Hoskinson's involvement is another factor. He's personally very invested in Midnight's success, and we know he has a knack for rallying the Cardano community around big ideas. If he continues to champion Midnight like he did during the airdrop hype, tweeting about it, doing AMAs, That enthusiasm will likely keep momentum going. The founder's backing, plus a sizable treasury, since the foundation obviously holds a lot of tokens for rewards, means the project will have resources and attention to drive adoption post launch. However, now we flip to the bearish or skeptical case. Not everyone is convinced Midnight will be a game changer. Let's address a few concerns. Airdrop doesn't guarantee adoption. Big airdrops are fun, but they often turn into sell pressure. Midnight tried to soften that by vesting the tokens. Only 25% unlocks on December 8th, with the rest released in 3 stages over about a year. It helps, but many people will still sell each tranche, especially non-Cardano holders who just find free night in their wallets. That steady stream of unlocks could weigh on the price unless real demand grows. Adoption isn't automatic. Midnight has interesting tech, but plenty of good projects struggle to get users. Cardano itself has had slow periods when it comes to app development and TVL. Midnight needs builders and active dApps, and privacy platforms haven't historically driven big DeFi ecosystems. Its privacy with compliance angle might be promising, but it could also confuse people or move slower if early traction depends on enterprise partners. If months go by without standout projects, the hype could fade fast. Regulatory and perception risks. Midnight aims for privacy that's still compliant, but regulators might not see the nuance. Anything that looks like a privacy coin can get extra scrutiny, and exchanges could be cautious if they sense potential pushback. Retail users may also associate privacy tools with sketchy activity, even when the tech is legitimate. It may feel complicated for average users. The multi-step claim process, snapshots, new tooling, and wallet quirks have already tripped people up. If using Midnight involves extra steps, bridging, or managing new token types, casual users might drop off. The team is improving the experience, but ease of use will play a huge role in whether people stick around after the airdrop. Now, before I go any further, let me drop a quick reality check and disclaimer, because this is a lot of speculation and you need to stay safe out there. This might shock you, but I'm not a financial advisor and nothing in this video is financial advice. Cryptocurrencies are highly volatile and you could lose all the money you invest. Always do your own research and consult a qualified professional. Your investments are entirely your responsibility, and you should know that nothing is ever guaranteed when it comes to investing. Neither I, this channel, nor YouTube are liable for any losses. This video is for entertainment and educational purposes only. Alright, with that out of the way, let's talk about how I'm approaching things personally and some steps you might consider. Not financial advice, of course. Whenever there's a big event like this launch, where a new token is about to hit exchanges or there's a flurry of activity, one thing I always do is be prepared on the exchange side. You never know when an exchange might freeze up, halt withdrawals, or just get overloaded with new signups. I've seen it happen time and again around hyped events. That's why I have a strategy. I sign up, verify, KYC, and test as many exchanges as possible in advance. By having multiple options, I'm not stuck if one platform goes down at a critical moment. If you haven't done this yourself, it's worth considering. And it doesn't cost anything to just have the accounts ready. Just remember to enable security features, two-factor authentication, strong passwords, etc. on all of them. Now, full transparency. If you're looking to open new accounts, I have affiliate links for most of the exchanges I trust on my website. The link to my site is in the description. Those are affiliate links, meaning if you use them, it supports the channel. I might earn a small commission, but at no extra cost to you. It's a win-win. You get set up with an exchange often with whatever sign up bonuses they offer, and you help me keep making content. Of course, don't feel obligated to use my links. The important thing is that you have your exchange backup plan in place, whichever platforms you choose. And as always, only use reputable exchanges and never leave more funds on there than necessary. Which brings me to another crucial point: security. Big events like token launches can be chaotic, and it's easy to get caught up in the excitement of trading, but never lose sight of the fundamentals. Not your keys, not your coins. I strongly believe in keeping long-term holdings off exchanges and in cold storage. Personally, I use hardware wallets like a ledger device to store the majority of my crypto safely. If you don't have a hardware wallet and you're serious about crypto, definitely look into getting one. Just be careful where you buy it. Always purchase directly from the manufacturer or their official store. To help with that, I've got a direct link to Ledger's official site on my website, also in the description. That link is an affiliate link as well, so if you use it, it will give a little kickback to support the channel while ensuring you're getting a genuine product from Ledger itself. But whichever way you go, hardware wallet is the way to truly own your crypto and protect it from hacks or exchange failures. Given all the exchange drama we've seen in past years, this is non-negotiable for me. I sleep much better knowing I control my keys. Since we're talking about Cardano in this video, I'd be remiss not to mention one of the best things you can do as an ADA holder: staking. If you've got ADA sitting in your wallet waiting for the next big price move, maybe you're holding out to see what midnight does for Cardano's value, you really should put that ADA to work in the meantime. I run a Cardano stake pool myself. It's called Cheek, ticker CHEEK. By delegating your ADA to a stake pool like Cheek, you help secure the Cardano network and you earn passive ADA rewards every 5 days, each epoch. It's a great way to make your ADA holdings work harder for you rather than just sitting idle. And don't worry, staking in Cardano is non-custodial. Your ADA never leaves your wallet, and it isn't locked up. You remain in full control. You can move or spend your ADA anytime, even while staked. There's no downside in that sense. You're not committing to any lockup period. So if you haven't staked your ADA yet, definitely look into it. If you're already staking with another pool, but you want to support this channel and what we do here, consider moving your delegation over to the Cheek pool. Every ADA staked with us not only earns you rewards, but also supports us in continuing to provide content, research, and community in the Cardano space. We genuinely appreciate our delegators. Midnight is one of Cardano's biggest bets yet. It's a privacy-focused, interoperable partner chain launched in a way we rarely see: a full token airdrop across 8 chains. It leans into a future where privacy and compliance can work together. Communities form without VC pre-sales, and Cardano positions itself as a network that can link many ecosystems. If Midnight delivers, it could help Cardano finally shake the ghost chain narrative by enabling real enterprise use cases and drawing in more liquidity. For ADA holders, Midnight is worth watching. It might strengthen the Cardano story or simply become a long-term infrastructure piece that takes time to show its value. Either way, it's exciting to see something genuinely new in the space. Now I want to hear from you. Are you claiming night? Will Midnight bring real activity to Cardano or fade once the airdrop buzz dies down? Is this the catalyst Cardano needs or just another farm and dump? Drop your thoughts in the comments. The community is split on this one. Quick reminder before you go, if you want to deepen your crypto skills, trading, portfolio strategy, risk management, and more, check out cheekyschool.com, the crypto education platform I co founded. You can use YT50 off for 50% off any course. It's one of the best ways to invest in yourself, especially heading into a new market cycle.